credit makeover at Credit Justice Services, which is what we're going to talk about today. All right, now, there's obviously a problem in today's economy, and we're all very much aware of what that is. But one of the major problems that has been identified is the inaccuracy of credit reports. And there have been several studies on credit reports done over the years. And in 2002, the National Credit Retailers Association found out that 20% of consumers were misclassified for subprime loans, which meant that out of 100 people, 20 people were put into a subprime loan. Well, what does that mean? That means that 20 people who would have qualified for a better interest rate on their mortgage loan, which over many, many years would have literally saved them tens of thousands of dollars, were classified as less than prime borrowers and were put into a loan program with a higher interest rate. And so those people, because of errors on credit reports, are going to spend tens of thousands of dollars over their 30-year mortgage, more than they would have had their credit report been reporting accurately, and then, of course, they would have qualified for a better program. A 2003 Federal Reserve Board study found that 70% of credit reports contain inaccurate information, and this is the big one. In 2004, the Massachusetts Public Interest Research Group conducted a study where they surveyed credit reports. They had people, just random people, pull credit reports, and what they discovered was 79% of those credit reports contained inaccurate information. So that means 8 out of 10 people have some form of inaccurate information on their credit reports. Now, why is this? And this has been a major, major headache. The American consumer in the late 1990s, at the end of the decade, the biggest complaint to the Federal Trade Commission was the FICO score and credit reports. Consumers wanted to know what made up this magic FICO number and what they could do to have some effect on it. And so Congress approached the 3 credit bureaus and asked them, for the magic formula, which is a huge secret. They were not going to tell anybody, and they refused to disclose to Congress what precisely makes up the FICO score. And so Congress saw that there was a need to empower Americans in this area. So let's talk about that need, the need in the marketplace. Okay, how many times have you, or even one of your clients, if you work in a related business that deals with credit, I'm sorry, but you don't qualify. This is happening all over the place. It's happening to people who just want to get some furniture on credit. It's happening to people who want, obviously, to buy a house. And I still really believe that homeownership is absolutely the American dream. It's happening to people who are trying to refinance. I met a man at Christmas time who confessed to me that him and his wife were living off of the refinancing of their home because he was in an industry that had really taken a hit because of this economy. And I always think, like, what if I got to that place where I needed to refinance my house and it was my only, last resort source of income, and I went to do it and I couldn't do it because of my credit score, even though I had equity. It would be tragic. Being said, no to buying a car, which is essential in, the world that we live in. You have to have a car to get to your job, to do your shopping, and etc. Insurance rates. Doug told me that if I had a DUI on my record and I had a higher credit score, or if I had a perfect driving record with a lower credit score, that the DUI person would pay lower automobile insurance than the lower credit score but perfect driving record. And I honestly didn't believe him. So I walked into my State Farm agent and I sat with him and I gave him some scenarios, and that is absolutely indeed the truth. You can have a perfect, squeaky clean driving record but a lower credit score, a less than ideal credit score, and you will pay more for your car insurance than somebody who has driven under the influence of alcohol. So, Credit scores are really affecting a lot of areas. Credit cards. When we were young growing up, my parents had credit cards for emergencies, and they would use them in that fashion. What do you do if you have an emergency? If the heating system in your house goes, or, your oven breaks, and you need to make a major purchase and you don't have the cash, that's what credit cards are for. But if you don't have credit, you can't get a credit card, and if you have a very low credit score, you're going to get one of those low-quality credit cards where they basically offer you $200, $250, and they charge you like over $100 in setup charges and fees just to get going. So by the time all is said and done, you've got this brand new credit card, and you really have very little bit of money available on it. So those aren't really helping people. Renting an apartment. What if you've just gone through a foreclosure and your credit is destroyed, and you go to try rent an apartment and you're denied? Like, where are you going to live? There's just so many issues going on in today's economy around credit. And so here at Credit Justice Services, we really think that we offer a solution to these issues. Now, in the credit repair industry, right now the timing is right because it's all about FICO. Okay, for a long time in the mortgage industry, it's been all about FICO. When you went for a mortgage a couple years ago and you submitted your personal information and your financial information, a real person would sit down and evaluate your worthiness to be given a mortgage. Okay, over time what has happened is the FICO score has become paramount to that personal service in loan underwriting. And now it's about a number. You have to ping at a certain number in order to qualify for certain programs. And if you're not there, you're not there. So we offer a solution to help out with that. There's a growing need, the future of credit scores. What else is going to be affected by credit scores? What else is coming along where credit scores are going to be a viable part of you being evaluated for something? Our unlimited market. Okay, we have close to 300 million people living in the United States of America, and we always like to throw out 100 million people for those that are too old or too young to be interested in using their credit. But that still leaves about 200 million people, and if 8 out of 10 of those people have inaccurate credit reports, then we have quite a bit of people to help with credit repair. And we also have the opportunity to help other businesses that are related to credit. We can help the mortgage industry, the real estate industry, the insurance industry. We can help financial advisors, people that are doing tax preparation, automobile dealers, people that rent property. There's a lot of other businesses that need help with our services, Credit Justice Services. So what is the solution